Hey everyone, welcome back to another dividend investing video. Just when you think they can't go any lower, they go lower. I'm talking about AT&T ticker T and Verizon ticker VZ from the communication sector, telecommunications, hitting new lows over the last week, although they have recovered some since then. Any investor who has held on to these over the last decade are likely sitting on substantial losses. Many of them have sold out of those positions. Today, both of these stocks are sitting at ridiculous high yields. AT&T at 7.52%, Verizon at 7.7%. And that might be appealing to investors looking for current income today. Now, I'm going to do my best to wade through the BS on these two companies, look at what's going on, and talk about why an investor might want to own these and why they might want to avoid them. I'm going to talk about some potential alternatives that look a little less toxic as well. So let's get right into it. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. Now, year to date, the S&P 500 is up 18.74% at the time of publishing this video. We're in the later half of July 2023. Yet AT&T is down 21.24%. Verizon has fared even worse, down 28.91%. My own positions in both companies are down pretty rough. First, I'll talk about AT&T's, but this is a much smaller position. It's the smallest position in my current dividend growth income portfolio that I'm growing here publicly on the channel. I have 13.662 shares at an average cost of $18.60 per share. Right now, my position is down a little over 20%. This is paying me about $15 a year in dividends right now, so I'm down huge percentage-wise. It's my biggest loser in this portfolio. But it's not really a lot of money at all. I'm only out about $50. Verizon, on the other hand, I'm sitting on a decent loss. I was accumulating Verizon, dollar cost averaging to it, back in 2020 and 2021 in an older taxable account I have with Robinhood. I managed to hold this through my divorce. Now, I haven't really added to it. I have 35 shares right now, sitting at an average cost of $54.28. And these shares pay me a little more than $88, $89 annually. You can see I have $23 dividend payment pending. So this was an investment of about $1,900, and today it's sitting below $1,200, sitting on a 37.5% unrealized loss. It was even uglier looking back when both of these companies were at their lows earlier in the week, but the share price have started to recover a little bit some. And stick around until the end of the video, and I'll share my plans for what I'm going to do with both of these positions where I am down. Now, over the last decade, no one's been buying AT&T or Verizon thinking they were going to double their money or triple their money. These are income-generating stocks that pay hefty dividends. And that's why investors would typically buy stocks like this. I bought both of these stocks as a means to increase my dividend income to up the yield of my portfolios, aka I was chasing yield. But remember, dividends at the expense of your invested capital, it's a different story. Especially if you're not in retirement or living on your dividend income, you don't want to be buying something that's simply paying out a bunch of dividends and losing value. It doesn't make any sense. And nobody was buying Verizon or AT&T at the beginning of this year hoping that it would be down more than 20%. Nobody. And given how far these have fallen now, some investors might be looking at these and wondering if a turnaround is possible. Could they maybe 2x their money from this point in the next couple years? And look, just by these companies returning to where they were trading at a few years ago, so it's potentially now starting to attract a different kind of investor than, say, your average income-oriented dividend investor. Now, Wall Street analysts in general see a lot of potential upside for both companies. AT&T has a price target of $20.27, which is a potential 37% upside from where shares are trading today, while Verizon has an average price target of $42.91, representing 26.65% total upside from where shares are today. Now, if the last 10 years are any indication, however, these stocks have been dead money. Shares of AT&T are trading 46% lower than they were 10 years ago from the publishing of this video, and shares of Verizon are trading 34% lower than they were 10 years ago. And they can still go lower. They can always go lower. This begs the question, are these at a deep discount right now and a good value? Or are these yield traps and dead money? AT&T is trading at a PE ratio of 6.1, nearly a 30% discount to its own 5-year average PE of 8.7. And Verizon is trading at a PE ratio of 7.3, nearly a 35% discount to its own 5-year average of 11.3. But as I bought these for dividend income, that's really my main concern. Are these dividends safe? There are some legitimate questions that surround the safety of the dividends from both AT&T and Verizon right now. And really, there are only one or two more crises away from needing to potentially cut their dividends. Both stocks are getting hammered after being linked to toxic lead cables deployed by their predecessors decades ago. And this is triggering fears of a 3M-like legal liability that could hang a cloud of litigation over both companies for years. So Simply Safe Dividends has downgraded both of these companies' safety scores accordingly in this last week. AT&T has been given a safety score of 60 into borderline safe territory, down from a score of 70, while Verizon has been downgraded from a score of 80 down to 70. Now, AT&T does appear to have more exposure to these litigation concerns, as they have a larger cable footprint, and their balance sheet is weaker as well. Both of these companies are highly in debt, and multi-billion-dollar legal liabilities would represent a significant chunk of AT&T's and Verizon's cash flow, and it could delay their own debt reduction plans. It's that debt that concerns me the most with both companies, because that margin of safety this dividend has, they can cover their dividends with free cash flow, but they also have to unload all of this debt at some point. Now let's talk about a couple options I think are superior to AT&T and Verizon for the vast majority of investors. Okay, I've been investing in a related company, and that's American Tower REIT, ticker AMT. They are one of the companies that own the land and communications towers that companies like Verizon, AT&T, and T-Mobile and such lease out of their business. A similar option is the competitor Crown Castle, ticker CCI. So while I don't quite get the yield I'm getting out of an AT&T Verizon, I'm getting more dividend growth and returns that are actually rivaling the broader market, not decades of dead money. And speaking of T-Mobile, they don't pay a dividend, but their stock is up over 500% over the last 10 years. Nobody would complain about owning that. You can also look at Comcast, ticker CMCSA, in the communication sector. It's a solid dividend growth stock that I've been buying myself. And while it's run up some, its valuation still looks pretty appealing to me, and they feature double-digit dividend growth as well. Now, full disclosure, I am long both American Tower and Comcast. As for my own plan with my small positions in AT&T and Verizon, my 35 shares is enough of that company for now. I'm going to hold on to it. I don't really see a reason to sell, as I bought it for dividend income, and I'm going to continue to collect that dividend income. And I'm really going to be reinvesting that elsewhere. If something changes with that, then I'll reconsider. With AT&T, it's a much smaller position in this newer portfolio. I'm going to leave it there. I'm going to let the dividends continue to reinvest. I might throw a little bit of money at it here and there, but I'm not really going to be focused on it. I suppose you could see me adding to Verizon and lower the cost basis, but it comes down to opportunity cost. Every dollar you invest needs to be invested thoughtfully. And I just see too many preferable opportunities in today's market than your Verizons or AT&Ts. Now let's say I was in retirement, living off these dividends. I'd be more inclined to give up some positions in there for that yield. I'm understanding the risk that it could pose to your invested capital and also to their dividends given their unfortunate debt situations. Now, as someone who's still in the earlier stage of the game, I'm focused more on companies like Comcast and American Tower in this communications sector. So no plans to sell out of VZ or AT&T on my side, at least not in the next couple quarters. I'm going to keep an eye on things. New developments could change things. And of course, I will keep you all in the loop as well. I would like to hear down in the comments, what are your plans for these companies, AT&T and Verizon? They've long been extremely popular dividend income investments for that sweet, sweet dividend income. But they've fallen on hard times and are currently out of favor. Do you prefer one or the other? Are you avoiding these kind of stocks entirely, or are you sitting on losses like I am and holding on? Maybe you're doubling down. As much as it sucks to lose, this is why we diversify. The idea is to have the winners outweigh the losers. At least I can say I've done that. And it also helps to focus on building that dividend income, seeing that go up each and every week, regardless of what the markets are, they're up or down, or my stocks are up and down. That's a huge motivator to keep on investing. So thanks for sticking around. If you'd like to see my comparison of popular dividend stocks, Coca-Cola and Pepsi, and answer once and for all that age-old question of which is the superior dividend king, go ahead and click onto this next video. I hope you have a wonderful day, and until next time, keep investing.